Hi, folks. This is Lee with the Market Sense for the week of December 15th, 2020. The charts in this presentation come from the Trade Navigator software, and this is a weekly bond market chart that's been sideways almost since Carter was president, well, at least back into March. As you can see, in the last couple weeks, we had this exhaustion bar down, which got reversed, and now we're just kind of going sideways. This leaves us looking at support around, well, round figures here, 172 for support and 175 for resistance. I kind of expect both of those levels should hold if they're even approached. If they break, it wouldn't really mean much to me, but I really think they'll just hold. There's a tendency for the market to just sort of slide into the end of the year. The potential exception to that is if the Fed were to say or do something strange in their statement Wednesday afternoon after their two-day meeting adjourns. That is unlikely and unanticipated, which of course is why it would be very jarring if it happens. But I don't expect that. I think we'll just be kind of quiet. And again, 172 to 175 is what we expect will remain containing this market for this week. In stocks, these bars are really getting a little harder to see, but we're going to start dropping off this low within a few weeks here, and the scale of the chart will change. Obviously, new highs last week. That's a good reason to not be very anxious to sell anything. They have come down to support here, which is around 36.82, I believe. Oh no, is that yeah, 36.39. I'm sorry. That middle moving average is 36.39. The 36.82 is potentially resistance. I say potentially because again, you just made new all-time highs, not really looking at resistance, and certainly not looking at resistance at new all-time highs. But even though this is below the previous week's high, that's 37.07, by the way, I don't really expect this to hold it for the week, although it could. Stocks have a tendency to sort of slide and grind higher in December. No real enthusiasm, no real breakout type stuff usually. Volatility and volume both are down somewhat. So it's possible they could hold that, but I really just don't have any desire to sell them. If they could break all the way down to 35.80, it really wouldn't be a problem. It wouldn't look bad. So no reason to sell that I can see. I just expect them to be quiet, and it's quite possible that the low is already in. Less likely, and even still possible, though, that the high is in also. They could stay quiet this week. Looking at the QQQs for the NASDAQ, similar situation, only maybe a little more bullish. They haven't been down to this support here near 300. That's actually 300.22 is the support this week. They've just kind of opened higher and stayed there, and they don't appear to be holding this resistance at all. I think you got to look at 307.60 is a possible target, but again, when you're talking new all-time highs, you don't really want to think in terms of resistance. You're simply not going to make a living selling resistance with a market at new all-time highs. And similar thing to the S&P, if they were to break all the way down to this 293.65 area here, while that would look like a pretty good move, in the overall scheme of things, it would be nothing. The market would still look relatively bullish at that point. So there's simply no reason to get excited about the sell side. With the Fed meeting adjourning Wednesday, and we do have a couple reports. Obviously, the weekly employment report Thursday is important. But I just don't really think there's a lot of market moving material out there unless we get some sort of shock, and I can't imagine what that would be. But, we still have a transition to go through in terms of the power in the White House, so anything's possible. So that's what we've got for you today. I hope you can find something profitable to get yourself into.